Namaskar, good morning. When I read Elevate, Educate, Excel, I get reminded of our prayer, which I think everybody has been praying for since time immemorial. Asato ma sadgamaya, tamso ma jyotirgamaya, mrityor ma amritgamaya. Lord, take me from ignorance to wisdom. Take me from darkness to light. Thank you, Ji. Take me from mortality to immortality. This is what we've been seeking for generations. We belong to a culture and civilization. This was Divya, right? Satya's daughter, who was singing that such a beautiful bhajan. And I was telling Usha ma'am that with this voice where you have Saraswati in your throat, you don't need any instrument. I mean, it looked like the best music. So I got reminded she was praying to Lord Krishna, and the Lord says in Gita, Jnana Vigyan Triptatma Kutasto Vijitendriya Yukta Ichute Yogi Samlostashma Kanchana. We are talking about the wealth, but the one who is endowed with knowledge and special knowledge, Jnana and Vigyan, the one who has controlled his senses or her senses. And for us, controlling greed and fear is very important. And Babu and Anupriya, I'm very happy that you're talking about 2035 and not what will happen in markets next week with budget or monetary policy or this quarter's results, so on and so forth. But thinking about that long. And so if you have restrained your senses and surrender to the God, then a lump of earth or gold is like same for you. So I got reminder of that. We are all in this very pious land of revered sage Tiruvalluvar. Any challenge in life and one couplet, the one Tirukular, and you get the answer. So for us in our business, it's very important. I've been associated with you for many years. I might have quoted before, I don't remember, that there is no bigger wealth than virtue. I cannot pronounce Tamil better. So I won't try that. So I'll give the English translation, but those couplets, two lines of Kurals are just unbelievable. The amount of wisdom that you see in every two lines is just unbelievable. That there is no bigger wealth than virtue, and there is no bigger loss than forgetting it. There is no bigger wealth than virtue, and there is no bigger loss than forgetting it. And somewhere, if I remember correctly, one of the Kurals says something like this, which I was thinking that even in AMFI we can use in volatile times, where he says that the fear of loss should not make you too worried, and which is like, अगर बहुत volatility है तो डरना नहीं चाहिए, because 2035 तक इंडिया बहुत अच्छा करेगा. Our industry has done so. I'm in this pious land where it's said that there is no bigger wealth than virtue, and this is where the profession in which we are. I was presenting to a group of you yesterday in Mumbai. I think some of you might have seen virtually, where I was presenting on focusing on 100% trust, focusing on 100% trust, not 99% trust. Never say everyone else is doing it, so we are doing it. Never say you cannot be holier than thou. Each one of us have to be holier than thou if we really want to take our industry in 2035 to the heights that we all need to take. And it's very important. I always say this is the most noble profession in the world. This is the most noble profession in the world, where we are dealing with somebody else's money. And I had like two pictures. One, the picture was of a doctor, a surgeon in the operation theater, and why you trust the surgeon. You are in anesthesia. You have no idea what's happening to your body, but we trust because we know that the doctor has got the knowledge, the skill set, the experience, has got all the tools, everything possible, and they will ensure that the surgery is done properly, and pre-operation and post-operation, everything will be fine. That's the trust that we have. And in our profession, each one of us have to work very hard every single day to earn the same kind of trust. Of course, we are very transparent and we put many things, but we have to have the same kind of trust that a person has when going to a surgeon. And the last picture was like, when you throw a baby in the air, baby laughs. Baby is in a joy because baby knows that there are two hands waiting to hold back and enjoy every second of that, few seconds or nanoseconds in the air. I mean, as grown up, if somebody does with us, I mean, we'll really be very worried. And each one of us have to ensure that our investors feel like that there are two hands who will take care of that, whatever happens in market, whatever happens anywhere in the world that Mr. Satyanarayana was talking about. That's very, very critical. We have to earn this trust day in and day out. Our industry has done very well. Last year was a very good year. This was the 9th consecutive year for Indian markets to deliver positive returns. They've been quite volatile in last few days, few weeks, few months. I'll talk about it in few minutes' time. But last year, one that our investors made money and feel happy about it, that's always the biggest joy that we have at the end of the day. And also industry touched new highs, so 68 lakh crores of AUM. This is $800 billion of AUM. This is where United States asset management industry was in 1988. By 99, 2000, they were almost $4-5 trillion. So maybe one can project where 2035, where we should be if India also goes on in that trajectory from an economic growth perspective and from growth of capital markets perspective and the way we can take our industry. The number of folios at 22 crores, but the biggest heartening feature has been the growth in the SIPs. The number which was 4,000 crores in 2016-17 has grown to now 26,000 crores. This makes it almost $35 billion a year, $35 billion a year. Foreign investors, as far as I remember, have never invested that kind of money in any year. Somebody was jokingly saying yesterday, foreign investors seem to be doing SWP, Systematic Withdrawal Plan. Every day they are selling. And I said, no, I think at some point in time they will come back. I'll talk about the markets in a few minutes' time. But I think the power of domestic money has clearly, has really changed the Indian markets dynamics. And over a period of time, this will keep us in good stead. In many ways, I can say that this is like an Atmanirbhar capital market. Our markets have always been so vulnerable to global capital, to the global liquidity, global risk sentiment. But now that the flow of domestic money is providing stability to the market, doesn't mean that markets will always go up every month, every quarter, every year. That's not the nature of the markets. Equity markets deliver high returns in the long run because they are volatile in the short run. It's very, very important to understand that. That's a message constantly we need to give it to our investors. But this flow of domestic money in the long arc of things is very good that Indian investors get exposure to India's economic growth, which over the years has primarily been with the foreign investors. And now last year was the first year where the ownership and Nifty of domestic institutions almost overtook the ownership of foreign investors. But we have a long way to go. We would still need huge amount of foreign money given that the humongous investment needs that we have in our country over the next 10, 20, 30 years. But at the same time, it's very important that Indian investors also enjoy the fruit of the growth that India is going to deliver. Why only foreign investors should be doing that. So SIP has been one of the most heartening feature of the growth that you have, and all of you have played a very, very big role in selling the funds in the right manner, that this is about power of compounding over a long period of time, and this is not about making money in a quarter or in a year. And that's like one of the biggest change that has happened. When I look at some of these numbers, and like it took us industry for 20, 25 years of a lot of hard work, and all of you who have been sitting here, large number of you have been around for a very, very long time in the market, in the industry. We saw like growth like this, and then suddenly we have seen substantial growth in last couple of years. Of course, good markets have played a role, but to me there are some of the other reasons. The first reason is the track record. Now you don't have to go and explain about how mutual funds will deliver, because you can go and talk about 30 years of funds. Let's say FlexiCap fund, which celebrated, our HDFC FlexiCap fund, they celebrated 30 years on 1st January 95. You can tell investors, and there are funds like that, you can tell investors that over a 30-year period, this is what the fund has delivered. Of course, as a responsible fund manager, as a responsible distributor or advisor, we always say, whenever showing any past returns, I mean, if you see, returns are like one column, but we have many of those other lines that past performance is no guarantee of future performance. Mutual funds are subject to market risk. Please read the offer document carefully, so on and so forth. But at the same time, it shows that that through many ups and downs, I mean, so many ups and downs would have been there, economic cycle, business cycle, profit cycle, credit cycle, political cycles. But this is what has been the experience that Indian investors have got over 30 years if they were a disciplined investors, if they didn't get swayed by the volatility, if they didn't get swayed by the short-term pessimism, or didn't get too euphoric when times were very good, like few months back in certain set of, let's say, sectors or certain part of the market. If you remain calm and patient, this is what the markets have delivered. So first is the reason we have seen this growth, and the reason we'll see tremendous growth over the next 10 years. The first is the long-term track record that industry has built. The number two is the transparency. And I always say this with deep sense of pride as well as humility, because we have a long way to go, but we work very hard. I mean, we just had our AMFI board meeting. Chennai is here. We spent so much time on like what all we can add in our fact sheet, what all we can add in our fact sheet. Things that are, I mean, required by from the regulator side, but what else? I mean, we had a working group working on that. How we can constantly, the idea is how do we improve our disclosures? How can we make our industry more transparent? And Mr. Tandon is sitting here. We work very closely with him on what all we can do, the way we are marketing our fund, the way we are advertising our fund, the kind of disclosures that we have, what all we can do to earn the trust of the investors. And I say this with, and we compare ourselves with many other countries in the world. There is no place in the world, and I say with deep sense of pride as well as humility, no place in the world which has made a product like ours as transparent as we have made. And we have worked very closely with the regulator, with all of you, and industry, where all the players come together to ensure that if we are not transparent, if we don't have the best-in-class disclosure, we won't be able to really grow the industry the way we want to grow. So first was track record, long-term track record now the industry has built. The second is the transparency. The third is the technology. Again, a lot of credit to the regulator, and of course the digitalization of finance that has happened in India has made over the years more and more easier and easier for investors, whether it's the KYC, onboarding, transactions, all of that has become, and that's why the volumes that we have gone, we have seen the growth. I mean, the MFDs, the number of SIPs you are doing, I mean, you have been doing for last 6 month average, is more than every single month average is more than what you used to do in 1 year time, right? I mean, all the MFDs put together. It's possible because of the technological changes. And the fourth T is, and just to create that acronym so that I remember it, I don't have any slides. The fourth T is the training. And again, something very unique India has done. Several years back when regulator asked that 2 basis points of your money has to be spent on IAP, everybody thought because liquid funds were making like 3-4 basis points, it's like 50% margin gone. But in the long arc of things, again, how it has helped that the industry worked very hard. All of us collaborate together, and the whole campaign of Mutual Fund Sahi Hai and everything around it that we have done, taking it to every nook and corner of the country, creating that curiosity about the product, creating awareness about the product, has kept us in good stead, and this is where the industry has grown. And all of this put together has put the fifth T, which is the trust. And this is what has led us to grow the way we have grown. This is what will lead us to grow much more over the next 10 years, and constantly we have to work on that trust. We have to take the industry to the next level, which is like large part of AUM historically has been what we call in our parlance T30. Now we have to go to the real Bharat. We are already going there. How many of you are from B30 towns? If you can raise your hand. Oh, there are many hands. Thank you so much. Clap for themselves for what they have done. So, and by the way, I mean, at HDFC AMC, we take deep pride. On 2nd of January this year, we opened 25 new offices in a single day. Last year, I was telling someone in SEBI that you don't see many banks doing that these days, Usha ma'am. And you see an asset manager doing that. Last year, we did 24 in 24. This year, we did 25 in 25. So in last 13 months, we have opened 50 new offices, and most of them are in B30 towns. Of course, one can say in the world of technology, why do you need offices? But I strongly believe believe that it's important we leverage the power of technology, and now AI will change many things positive for us. But the warmth, the trust that gets built with the physical connect will never go away in our industry, and that's where the importance of this channel, MFDs. It's very, very critical in a country like India, the stage where we are today. It's both important. So 95% of our transactions get done digitally. 95% of transactions. This number used to be, Rajiv, in 60s. 4 years back, it's increased to 95% now. Probably we'll go to 97, 98 very soon. All of us in the industry are working very, very hard at that. We just set up a tech committee which is working on many things, both on security as well as on how do we become more tech efficient in AMFI. But at the same time, that warmth will be very, very critical. And B30 in last couple of years, but we have a long way to go. So I just give you a few numbers. 19% of our overall industry AUM comes from B30, but the story doesn't stop there. 29% of equity AUM is in B30. More than 30% of the equity flows are from B30. 40% of SIP AUM, 41% to be precise, of the SIP AUM, the flows that come are from B30. 46% of the folios are in B30 now. And more than, this number was 50% till few months back, now it's almost touching 60. 60% of the new accounts that get opened on SIPs are from B30. Clap for yourself. But we have a long way to go. Still, I mean, we can all clap for ourselves, we can all discuss all these numbers, but there are only 5.25 crore investors. I was just chatting with some of the friends here a few minutes back before this event that some jeweler has defaulted in Mumbai, and I was told, I think in media reports, that 25,000 people have already put a complaint about they losing that money. And imagine like 1%, and this is like what they call SIP in gold or whatever the deposit that they take. And the whole country, I mean, out of 1.4 billion people, we just have 5.26 crore investors. We have a long way to go. So till, I mean, we reach every household in India and convey the message of, long-term wealth creation through SIP, long-term wealth creation, or I mean, putting money in the mutual funds. Our job is not over. We have a long, long way to go. And our responsibilities to both. Our one responsibility is to these investors and our also responsibility to the investors who are yet to come into our fold. We have a long way to go. I just thought that maybe given that, in fact, I generally don't like talking about the market in a forum like this, because I think we are talking about 2035. But given the, the environment over the last few weeks or months, because of the foreigners selling, because of many other reasons, markets have been volatile. But this is the nature of the beast. To be very honest, all of us, I mean, if you have listened to most of the fund managers in the industry over the last 1 year or so, everybody has been talking about the froth building and a part of market. Everybody says long-term story is very much intact. It's very difficult to time the market, very, very difficult to time the market. I mean, it sounds like cliche. All of you use that. It's the time and not the timing which is important, and nobody can time it. A year back, everybody thought so much of froth in, in some parts, maybe large caps do better than mid and small caps. But the fact is, a year later, mid and small caps did substantially better than the large caps. So timing that is very, very tough, and that's not our job. At the same time, looking at the markets, maybe I'll just very quickly. So whenever somebody asks me, "Bazaar kya lagta hai? Kya lag raha hai bazaar?" So my framework is like this. And typically the answer people start thinking is, this is what Trump did yesterday, this is what happened in budget, this is like monetary policy results. You think like that. My framework is like this. Look at 4 things: macro, trajectory of corporate profits, liquidity sentiments, 4th is valuations. So if you look at macro, India has got political stability, social stability, macro stability, financial stability. Balance sheets are in a great shape, both the corporate sector and the financial sector. Rupee has been weakening, but because dollar is strengthening, all currencies have weakened. Emerging market currencies have weakened quite a bit. It is not a current account deficit challenge. Usha ma'am has handled many of those crises over the years. This time it is not a current account deficit problem. This is like the dollar is strengthening and every currency is weakening, rupees is weakening. Foreigners are selling, I'll come to that in a minute time. But overall macro is good. Of course, growth, both economic growth and corporate profit growth has been lower in last few quarters or months, which has been lower than what was expected, what was built in and of every investor's expectations. But you expect that structural factors of economic growth in India are very much intact, and I'm sure policymakers will take the right steps. Corporate sector will work hard. All of us will work hard to ensure that India continues to do well. So from a macro perspective, broadly, I mean, if you go back in 2013, if you go back in 2008, if you go back 91, or any of those, this is not that kind of crisis. This is different. So macro overall long-term picture very much intact. Cyclical slowdown is very much there. Growth is delivering lower than what everybody projected, whether it's consumption, whether it's investment, whether it's exports. But this is cyclical, not structural. Number two is corporate profit trajectory. I won't go into quarter to quarter. But if you look at corporate profit to GDP ratio, it was 7% in 2007. That was the peak. It fell below 2% post-COVID. It's back to 4.5%, 5%. It may or may not increase from these levels, but what it means is that over the next several years, and India has like one of those very few countries like US where over a very long period of time, corporates have been able to deliver profit growth in line with nominal GDP growth. So if nominal GDP grows 10, 11, 12%, profits can grow at that pace because overall corporate profit to GDP is around 4.5%, 5%, less than 5%. The third is, and I won't talk about quarter to quarter because honestly that's not that relevant. You are talking about 2035 and long-term investment. The third is liquidity and sentiments. Of course, foreigners are selling because valuations were higher. I'll come to valuation part on a relative basis, and US markets have been doing so well. It's not only some of the other emerging markets, it's a bigger issue of money moving from emerging market or other market to US. US last year, if I remember correctly, got $350 billion plus. On an average for 10 years, they've been getting a fraction of that because markets have done so well there, and there is whole narrative about the tech stocks, etc. And of course, post-Trump, a lot of expectations. But I think at some point in time, looking at the relative valuation, as valuations correct, some bit of price correction has happened, some bit of time correction happens, people start looking at 26, 27 valuations, things should start looking good, and at some point in time they will come back simply because the top-down story of India has been very positive and it will remain positive. The bottom-up stock picking opportunity is very big in India. That will only become bigger. Last year there were, if I remember, 83 new companies have got listed. More than 1.5 lakh crores have got raised by these IPOs. So many companies are coming to the market. So the bottom-up opportunity is only improving of stock picking. And now with domestic investors putting more and more money, that's providing more, I would say, stability to the market. The volatility has come down structurally in the market. And the fourth is the valuation. This is where the challenge was, and all of us were saying throughout last year that valuations are on the higher side in the long run, very difficult to time the market, but there has to be some correction. And a lot of investors have come in last 4 years who haven't seen any correction. Market fall by 1 or 2%, and you get a call, when will this bear market end? I mean, I'm not on social media, but people who are on Twitter, etc., they would see a lot of people, when will this bear market end? Market crash. I've seen market falling 10% in post-COVID or let's say 2008 and 2013, etc. How can, a small correction be called as a market crash? This is part and parcel of the game. I think valuations were higher on some side. As I said, I think some bit of price correction and time correction will again make market healthy. Overall, if you ask me the 2035 perspective, I feel very positive about India for all the structural factors. You'll hear from a lot of my industry colleagues during the day, some of the very sage voices you will hear, and we'll get more from there, but I feel very positive. For us, only one thing is important. We have to work with earning 100% trust of each and every investor of ourselves. We have to exactly take care of when a baby is thrown in the air, the baby laughs. We have to take care of them from all perspective, and that's why it's very important that we keep elevating ourselves, we keep educating ourselves, we keep excelling ourselves constantly as an industry. We'll continue to work on how do we increase our transparency more. How do we ensure that we serve our customers better and better? That's the only formula for growth. We have a massive tailwind working for us because I mean, the industry is still very small. I mean, as I said, 5.26 crore investors. Whichever way you look at, the overall household balance sheet in India is $10 trillion. Out of that, just 5% is allocated. The overall household balance sheet in India, only 5% is allocated in equity. 50% is real estate, 15% gold, 15% bank deposits, and then insurance, provident fund, etc. Only 5%. This 5% number was 2.4% 10 years back. 2.4 has only become 5. We have a long way to go. And at our end, each one of us, it is an opportunity for us that this will grow. So India grows. India's savings will grow because India will remain a country of savers. Number 3, country will transform from a nation of savers to a nation of investors because increasing amount of savings will come into the financial assets. And 4th, digitalization will keep accelerating that pace because awareness is increasing. Regulator is working very hard. You saw the consultation paper yesterday or day before on the whole concept of I'm just putting a word, not that they put a word, something like a chota SIP, that why even a people with 250 rupees per month who can save should not enjoy the fruit of India's economic growth. So all of us are working together to grow that market, and your contribution, I on behalf of AMFI, on behalf of industry, on behalf of HDFC AMC, my sincere gratitude for all the hard work that you have been doing. And over the next several years, we have tremendous opportunity ahead of us. Of course, I'm in Chennai, but the 2 lines of Urdu, I'll translate that for some of you. ये मत कहो खुदा से मेरी मुश्किलें बड़ी है. ये मत कहो खुदा से मेरी मुश्किलें बड़ी है. ये मुश्किलों से कह दो मेरा खुदा बड़ा है. Don't tell Lord that I have a lot of challenges. Of course, markets will be like this. There will be changes, technological disruptions, many things will happen. But always tell challenges that my Lord is big, and my Lord is the trust I'm earning with my customer because I'm working with a noble objective. The only objective we are all working towards is creating wealth for every Indian. Thank you so much. God bless you.